All right, y'all. Welcome to the next session. And we are going to be discussing what I think is one of the most important aspects to being a profitable trader. This is also one of the areas that most people who start trading have a hard time with, and that is risk management. Risk management will either make you or break you as a trader, and I mean that with all my heart. If you have your risk management on lock, then obviously I cannot guarantee anything because this is not financial advice. But if you do have your risk management on lock and you're following a strategy that has a high win rate, then I don't see how you would not be profitable trading over time, or at least it would keep you from losing money. So today we are going to go through risk management, which will allow you to trade without gambling away your account. Okay, risk management helps take emotion out of the trading. Okay, a lot of times we see a good setup. We're like, look at this setup. I'm going to go ahead and bet the farm on this. That will work inevitably the first few times you do it. And then that fourth, fifth time, you will lose everything. It happens to so many traders I talk to. It's happened to me. The first few times you do it, you risk everything on your account, right? 10x leverage, all your trading capital. It goes great. You're like, man, I just doubled my account in one trade. You do it again. Feels really good. You start to get overconfident. Then what happens? You lose everything in one trade. Okay? Risk management will help to avoid all those things, right? We don't want to trade with our emotions. We don't want to get excited because we see a good setup. Instead, we need to execute like a robot. And I'm going to go through the different aspects of how we are going to implement good risk management, because it's more than just how much money you're putting on the trade. It involves your entry, it involves your stop loss, it involves the leverage you're using, it involves the strategy that you're using. So the first part of risk management that I say is very important is backtesting, right? Backtesting. If you have a strategy that you have created, whether it's an algorithmic strategy where you're doing like the 4-hour, 24-minute strategy in an uptrend or a downtrend, or if we're trading in sideways markets and you're just looking for divergences at levels of support or resistance, if you have backtested the specific strategy that you are using to trade and you found that it has, let's say this says here 85 out of 100 win rate, right? Even if it has, let's say, a 7 out of 10% win rate, okay, then you know that 70% of your trades will be profitable and only 30 of them will result in losses. So in theory, you could risk 100% of your account on every trade and still be in the green, right? If your strategy was 70% successful. But of course, you should never do that. I was exaggerating, because if you're going to lose, who knows how big that loss is going to be, right? You could lose half your account in one trade or more. People do it. There are other variables at play when it comes to risk management, such as the actual percentage of each individual win and loss. So, don't ever risk 100% of your account just because you think you have a high win rate. Don't ever do that. Okay, so the basics of risk management. Number one, do not ever risk more than you can afford to lose. If you find yourself being nervous during every trade, then you're risking too much. Okay? If you find yourself getting nervous during every trade you enter, and you're unable to look away from the screen once you have your stop loss and your take profit set, okay, you're risking too much. Okay? You can, I'm sorry I keep saying okay. I'm not going to say that anymore. You will know that you're risking too much simply by how you're acting while that trade is open. Are you glued to the screen? Are you sweating? If you're nervous, that means you're risking too much. If one single trade has the potential to make or break your account, you are risking too much. You should be able to take multiple losses in a row without having it affect your psychology. Well, that's a different story. Without having it affect your bottom line, right? We should be able to take multiple losses without it actually making us lose money. That's the point of risk management. You need to be able to enter your trades with as little emotion as possible. Accept the fact that losses will happen. Your risk management plan needs to account for the losses. It needs to account for the losses. When I enter trades, I'm entering the trade knowing it could be a loss, and my risk management strategy has already taken into account the fact that this trade could be a loss, and so could the next trade and the next trade. But the goal of risk management is so that you can take those losses and still be profitable. How does that happen? Well, it starts with knowing how much to risk per trade. It's generally advised for traders to never risk more than 5% of their total trading capital. It says account here, but I should say capital, because personally I divide and split up my total trading capital into multiple accounts. I'm going to get into more about why and how I do that later. But for the sake of simplicity, you should never risk more than 5% of your total trading account on any given trade. And you will need to calculate your leverage into this percentage. However, the more experience you have, the more comfortable you will be with risking a higher percentage of your account. For example, more experienced traders sometimes will risk up to 10% of their account per trade. Personally, I do not. I never risk more than 5%. And a lot of times I will risk 0.5% or 1% on a trade. If I'm scalping, I might risk 0.5% of my total trading capital. That doesn't mean I'm putting 0.5% of my total trading capital on the trade. I'll get into more of that later. I could put a lot of my trading capital onto a trade and still only risk 0.5%. That's very key. It's very key. It's all about risk to reward ratios here. I'll get into that too. Remember, trading is not a get-rich-quick scheme. Although it's definitely possible to get rich quick. I know people who have gotten rich quick. I myself have made a lot of money on one trade when I first began, and I didn't have a good risk management strategy, and I have also lost a lot of money on one trade. So although you can get lucky if you believe in luck and make a lot of money on a single trade, trading is not a get-rich-quick scheme. This is a marathon and not a sprint. The goal of every trader should be to develop a consistent ability to do technical analysis and enter trades using good risk management, and over time be profitable. Over time, you can be profitable doing this. You can do this full time, guys. You can. If you have less capital, obviously it's going to take you longer to get there, but you can absolutely start with a few $1,000s and work your way up to an account that's big enough where you can actually live off of this. But it's very important that you get this risk management stuff down. Otherwise, you will never be able to live off of this. You will never be able to do this if you don't get your risk management down. This is very important. The goal should always be to preserve your capital and making slow, consistent gains. You will see your account grow consistently over time. Remember, the number one rule to making money is don't lose money. If you lose, and I know I always talk about this, but here's the truth, guys. If you have $1,000 in your account, right, and you take a 25% loss in one trade, which happens to a lot of people, now you only have $750 left to trade. It's going to take you more than a 25% gain to earn back your $250, because now you only have $750 left to trade with in your account, which means in order to make back that $1,000, if we have $750 and we gain back that 25%, we've only made $187.50. So we had a win that was just as equal as our loss, but we're not back to break even. We still have to make, another $63 before we're back at where we started. So if you are not preserving that capital, it is going to be an uphill battle. And then the emotions start to kick in. You're like, dang, I just lost 25% of my account. I have to get it back. And that's going to cause you to enter a trade when you should not enter a trade. You're going to take another loss. And now you're going to have to earn back even more. I'm telling you, people blow their account this way all the time. So don't focus on making the money. Focus on preserving the capital. And that's what we're going to talk about today. So there are three factors, variables, that go into risk management. The first one is position sizing. Position sizing dictates how many contracts, in the sake of trading on Bybit, right? How many coins or tokens of cryptocurrency a trader is willing to buy. The probability of realizing great profits in crypto trading tempts traders to invest 30, 50, or even 100% of their trading capital. However, this is a disruptive move that puts you at serious financial risk. The golden rule is never put all your eggs in one basket. Guys, even in real life, I am a homesteader. I have 22 chickens right now. I don't put all my eggs in one basket. Okay, we have 3 different baskets for eggs in the house. And yes, just because you see the most perfect trade setup in the world does not mean you should put 100% of your capital on that trade. Or what I should say, doesn't mean you should risk. It doesn't mean you should risk 100% of that capital. So the first thing we need to talk about is risk versus reward ratio. Okay, the risk versus reward ratio compares the percent risk of loss with the potential percent of profit. In trading, the riskier a position, the more profitable it can get. This is especially true with longer swing trades, right? Because if we're going to enter a swing trade, let's say, for example, we want to enter a swing trade right here because we're at the top of the range, right? We're at the top of this range right here, and we're at the top, right? We could clearly see we have a range going on. This is the high of the range. This is the low of the range. Let's say we want to enter a short here. If we do enter a short position right here where we're at right now, this is the daily time frame, we would have to put our stop loss above the last, swing high, which, to be safe, that's like at least, I would say you want to give yourself at least a 7% stop loss. Honestly, because we would want to be above these wicks here, really you'd have to give yourself a 9% stop loss to potentially make, back to the bottom of the range, about a 25% gain. So you're risking 9% to potentially earn 25%, but depending on how much capital you're putting on the trade and depending on your leverage, this could be a very risky position. Okay, so this here is under the video, and you can read through this, how you calculate the risk to reward profit. Doesn't really matter what the math is involved in, but if you're using this long or short tool here, you will see that it will give you a ratio right here, risk reward ratio 2.05. Basically, that number right there is telling you how much more your potential reward is than your risk. So if I have a really nice position where my target is 46% short and my stop loss is at 5%, I'm about to potentially gain 9 times more than I could potentially risk. Okay, that's risk-reward ratio right there. And here are some good ways to ensure a good risk-reward ratio. Number 1, enter near support or resistance. Number 2, use less of your account to give yourself more playing room. Let me talk about this for a second, guys, because I think this is very important when it comes to your entries. All right? When you are entering a trade, the amount of capital that you can put on that trade depends on your entry, which I think is a very important thing that a lot of people overlook. It depends on your entry. And what I mean by that is this. Let's say, for example, and let me turn off some of these levels on my chart here, guys, because these are, let me just turn on one level. Okay, the other day I took a short from up here. Okay, this was a short that I posted in the Discord in the potential trade setups. When I give my ideas of what I'm looking for that day or that week, really. This was more of a weekly thing. I was looking for a short off of that $40,500 level because it was a daily level of resistance, and I was seeing that potentially market cipher B could form the bearish divergence on the 1 hour, and I saw money flow was coming down. I saw VWAP could potentially come down as well. Well, we did get that trade, guys. We got that trade. It was really nice. Now, my entry for that trade was also really nice. My entry was $40,599. Okay, $40,599. Let's zoom in here. And let's see, 40,599. I mean, that's pretty much, guys, right on the line here, right? Right on the line. Let me see if I could find it right here. Boom. Okay, I'm going to change my entry to white, and I am going to remove that daily level from the chart. Okay. Now, because this was my entry, I now have the ability to enter a short position right here, and my stop loss is above the last swing high. Okay, I'm going to put my stop loss above that last swing high, which if you see here is a 0.25% stop loss. All right, a 0.25% stop loss. And where were my take profits for this trade? My take profit 1 was 39.036. My take profit 2 was 37.4, give or take. So 39.036. Let's just say right about here was the take profit. And then 37.4 was the take profit. Boom. Okay, so those are my take profits. Let's take a look at this here. Remember, good risk management is only risking 1 to 5% of your total trading capital. It doesn't mean we're only putting 1% of our total trading capital on a trade, right? If you have $1,000, it doesn't mean you can only put $10 on that trade to risk the 1%. No, not at all. It means in order to risk the 1%, depending on your entry and the different variables at play, that will determine how much you can actually put on the trade. Now, let's say my goal is to risk 1%, just 1% of my total trading capital. That means what I could do right here is I could put 100% of my capital on this trade and only risk 1/4%. Does that make sense? Because my stop loss is in a place above that last swing high, I am able to put all of my capital, my whole stack on the trade, and if I lose, I'm only risking 1/4%. That is basically nothing. I'm basically risking nothing in order to potentially gain 7% on my entire stack. So if I have $1,000 worth of crypto, I'm going to be earning, $75 if I put my whole stack on here. That's a lot. Now, think of this. If I'm risking 1%, I could now 4x leverage my whole stack and still only risk 1% to potentially, 7.5%. What's 7.5 times 4? I don't know. Because I went to public school and you don't learn anything there. 30%, right? I could now be earning 30% on my capital, which is $300 on my $1,000 account. So I just earned $300, 30% on my account. Okay, 30%. That's $300. So now I have $1,300. And in that one trade, because it had such a good entry and I was able to 4x leverage my whole account and only risk 1%, now I have $300 where now if I'm losing, let's say I lose the next 3 trades now, okay? I lose the next 3 trades. So what's 1%? 1,300. Okay, $13. So I had $1,300 minus 13. I lost a trade. I'm still in the positive, right? I'm still in the positive. Let's say I lose another trade. Okay, $12.87. So I had $12.87 minus 12.87. I still here, right? I still am in the profit, right? I'm still up $274 from where I started, even though I've only won a single trade, but I've lost 2 trades. So I have $12.74. Oops. $12.74 times 0.01. That can't be right. Yeah, obviously $12.74. Sorry, guys. So $12.74 minus $12.74. So I've lost 3 trades in a row now. But that one win, I'm still in the profit. I'm still in profit. Okay, let's now lose 4 trades. Okay, now I'm going to lose another $12.61. I lost 4 trades. I'm still in profit. Lose 5 trades. Another $12.48. Still in profit. Do you guys see this? I just lost 5 trades in a row, and I'm still overall in profit. This is the power of good risk management and only risking 1% of your account and finding good entries that will allow you to, if you have a really good entry and you could leverage that account, you know, then you're golden, right? You're golden. Now, of course, not every trade I enter has a 0.25% stop loss, which means let's say you have a 0.5% stop loss. Well, now you could still put 100% of your account on the trade, 2x leverage, and instead of making $300 on the trade, well, now you're only making $150 on the trade, right? Which is still good because you're still up now. If you had the $1,000 to start, you're still up, 150 bucks. You have 1,150 bucks. You lose one trade and you lose $11.50. You're still up 138 bucks. You lose another trade, another $11.38. You're still up. You lose another trade, you're still in profit. You guys see this? Your risk management is everything because you could lose the majority of your trades and still be in profit over time. Okay, so let's lose one more trade. We won the first trade with 2x leverage because of our stop loss is 50.5%. Okay, and now let's win another trade. Okay, no, let's lose another trade. So we won one trade, we lost 4 trades, right? And now we're going to win another trade. What other trade are we going to win? Let's take this trade. This is a trade that I actually did take as well. I took this trade the other day. In the Discord, I posted it here where I was hoping to short higher. I said, unless we lose the daily, I'm only looking for shorts at these higher levels. We didn't do it. We lost the daily. So I was short from 40,292. All right, short from 40,292. 40,292, right about here. Boom, this was my entry. Now, notice something different about this trade. This trade, I had a much bigger stop loss. This trade here, I had to put my stop loss at 1.6%, okay? That means I have to risk less than 100% of my capital, 1x leverage, in order to risk that 1%, right? So what percent am I putting on the trade? Just for simplicity's sake, let's say we're putting 75% of our capital on the trade. So, we started with 1,000, we worked our way up to 1,500, and now we've lost almost 50 bucks, so we have $11.04, right? I'm sorry, not $11.04. We have $1,104. Okay, and so let's say that we put 75% of this onto the trade because of our stop loss. So we can only put $800 on the trade. My take profit 1 is down here at 39097. So I'm making let's say I'm making 3% on this now, okay? So I made another 24 bucks, okay? I made another, let's just round it up to 25 bucks. So 11.29 now we have in our account. Okay, so you guys see that? I won one trade. I lost 4 trades. I won a second trade, but the second trade wasn't that great. But because I'm still using good risk management, I'm not risking more than 1% of my account on the trade, I'm still able to be profitable over time. Now, here's the thing, guys. Once in a while, you are going to get those awesome, massive trades where you will have a lot of money in your account. Like, for example, I longed down here. Okay? And it was a really good entry. Let me show you. Let me see if I could find it. I actually don't know if I can find it. Might be in here. It is here. My entry was 32,111. Let's check it out. 32,111. For simplicity's sake, I'll put it right here. 32,111. This was my entry right here. My stop loss was down here. So I'm risking 0.5%, and I'm actually still in this long. I'm still in the long. But so far, you can see I'm up about 27%, right? So I could put 100% of my capital on the trade, 2x leverage, right? 2x leverage. And so now let's say a good trade like this comes along, right? And we're earning now 1129 because we're 2x leveraging it times 2. We're earning 29%, let's say 26%. We're earning 26% on 2258. I'm sorry, no, I did that wrong. So we have 2258, that's double our account, and we got 26%. So we just made, hang on, I'm sorry guys, I'm struggling with the math here. We because we have in our account $1,129, and now we double that, and now we have $2,258, and we just earned 27% on that. That's another $587. So 500 plus 1129. Now we look at how we've grown our account. Even though we've lost, what did we lose? 4 or 5 trades, and we've only won 3 trades. So we're losing more than we're winning, but we're still being profitable over time because we're using good risk management, and those losses don't hurt us. They do not hurt us. This is so important. I'm telling you guys, this will change the way you trade. This changed the way I trade. This changes the way people trade. Because what this does is, first of all, it allows you to take a loss and say, no big deal. I know I'll make it back as long as I stick to my strategy, and as long as I do my technical analysis, mark my levels, make sure I'm only taking trades where price is coming to my level, where I'm getting the divergences on market cipher B, stuff like that, guys. And you're going to do well over time, right? And so now, let's say I could lose 10 trades in a row right now and still be in profit, right? I could lose, $17. That's 1 trade lost. Minus $16. That's 2 trades lost. Another 16. That's 3 trades lost. 4 trades lost. 5 trades lost. 6 trades lost. 7 trades lost. I messed up, but you guys get the point. I was still in massive profit even after losing 7 trades. So all in all, we lost 12 trades, we won 2 trades, and we're still in profit because we're only risking 1%. We're focusing on those good entries. And keep in mind, guys, you're not always going to get those good entries. And if you're newer at trading and you have to use a 2% stop loss or a 5% stop loss, your gains are going to be slower. But over time, you will get those good trade entries when you get used to this, right? Especially if you focus on the levels. I would say, even if you have to only put, if you're in a short position here, let's say you get in here, and you have to have, that 2.5% stop loss. Well, obviously you can only put a portion of your total trading capital on here, right? You can only put 3/4 of your trading capital on here in order to risk 1%. You guys understand what I'm saying? So the better your entry, the more you can put on the trade. And if you have less than a 1% stop loss, then you can use leverage of your whole stack and still only risk 1%. Now, some people will be more risky and risk 5%, right? So that means if you get a trade that has, let's say you do like the short I took up here, where I had a 0.25% stop loss. Well, if I have a 0.25% stop loss, I could 20x leverage that and only risk 5%. Now that's powerful. If I was risking 5% of my $100, of my $1,000, right, and I could 20x leverage that, now I'm earning you know, I only came down to the second take profit. Now I'm earning 7% on 20K, which is $1,400, right? So that's powerful. If you're a more experienced trader, you could risk more, up to 5%. Just remember, it's best, and I especially recommend this to new traders starting out, that you risk 1%, even less, 0.5%, because the slow, consistent gains are going to be better than those fast, quick gains. Easy come, easy go, right? When you make money fast, you're going to lose it fast. If you're slow and consistent, you will win the race. Slow and steady wins the race, guys. So I hope that kind of makes sense here. And there is a calculator you can use. Actually, if we go to MarketCypher, MarketCypherTrading.com, I'm pretty sure that, don't they have now, let me go into the MarketCypher Discord, because Flop and Groper just posted a risk management calculator recently. Where was that? Here it is. This is the video that... Alright, y'all, so here we are on the MarketCypher risk calculator website. This is Flop and Groper's risk calculator. I recommend you check out this video. You can come here by going to marketcyphertrading.com/risk-calculator. Go ahead and watch the Flop and Groper's video on how to use this, because you can use this to kind of, instead of having to do the math yourself to figure out how much to risk on a trade, you can do it yourself here by using your total capital. Go ahead and watch this as well. There's another calculator you can use out there called, if we go to Kite Crypto's channel, check out Kite Crypto. He's a cool guy. This video here, crypto leverage trading with Kite. No, not this video. He has a calculator, so search for calculator, if I spelled that right. This video right here, best tool for leverage traders. This is also a spreadsheet calculator, which will allow you to put, let's see here if it actually opens up. Oh no, I have to download it here. But basically, this will allow you to calculate everything that you need to calculate to ensure that you are not risking more than you're supposed to risk. It will make sure that the amount of contracts you put on the trade is correct. It will make sure your leverage is correct. All you need to do is put in your stop loss. You need to put in how much capital you have and how much you're willing to risk, and it will tell you everything else you need to know. So check that out. Give that a download. Or you can also use the Flop and Groper risk calculator. This is very important, guys. This is very important. Something else, guys, that's important is make sure if you are setting limit orders or conditional orders to get into a trade, that you are doing it in a way that will allow you to have your stop loss only risking 1% of your total account. You can do that on Bybit. You can set a limit order. Let's say I wanted to short when price comes back up here and I want to go to sleep. I can set a limit order here and have my stop loss in a place that's only risking 1% of my trading capital. Okay? That's very important that you do that. Don't ever risk more than that 1% unless you say to yourself, I'm going to do the 5%, or you're feeling super risky. For me, 0.5 to 1% is optimal. Okay? Now, a few other things. Personally, you guys see my trades, right? You guys see that I post trades and I've got these crazy percentages, 65%, 500%, 600%, right? The way I am doing that and still only risking 1% of my capital is this. I have multiple trading accounts, and I have my trading account stack split into 5, 6, 7, 8 different accounts, depending on if I'm trading altcoins at the time on Binance Futures, which I don't even know if I'm going to go back to Binance anymore after what just happened. But, I will have my total trading capital split into multiple accounts, which will then allow me to use 10x, 20x, 30x leverage and still only be risking 1% of my total trading account. Now, something else that you need to know about leverage is this. Leverage is also a tool to leverage your capital. What do I mean by that? Well, let's say I only want to risk $400 on a trade, right? And I'm just picking an arbitrary number. I only want to risk $400, but I want to place more contracts on that trade, right? Well, then what I can do is I can up my leverage. I can make sure that the actual margin I'm putting on the trade is only $400, even though I have many more contracts on the trade than 400. But losing that 400, if I get liquidated, is still only going to be 0.5 to 1% of my account. So people think of leverage as something that just gives you a multiplication power of your total stack, but that's not how you should look at it at all. You should look at leverage as a way to leverage your capital. So let's just say, for example, I have $1,000, okay, and I have 5 accounts. Each account has $200, okay, 200, 200, 200, 200, right? Okay, so now let's say that of these $200, now in order for me to risk 1% of 1,000, 1% of 1,000 is $10, right? 1% of 1,000 is $10. So $10, if we do the good old math here, that's actually 5% of our 200, right? So now I can risk 5% of this account and only be risking 1% of my whole account, which means if I have a stop loss that's 0.25, if I'm 20xing that, I'm still only risking 1% of my account. So I can use 20x leverage. You guys get what I'm saying? And still only risk 1%. That's how you're going to be using such high leverage and still be maintaining good risk management. Now, I'm going to be totally honest with you guys. I do at times have certain trading accounts that I gamble with, okay? I would be lying if I told you I didn't have sometimes just play money that I have a Bybit account where I say, what the heck, if I lose this X amount of money, I'm actually just gambling here, right? And I don't do this with the account that I use to pay the bills. I do this just for fun. And a lot of times, I'll be honest with you guys, a lot of times I can make a lot of money doing that. Okay, I'm going to be honest with you. Here's the thing. If you're going to do that, you need to make sure, and the temptation is there, and I'm not saying it's bad to do it, but you need to make sure that if you have a gambling account and you just have, let's say you have 1 Bitcoin in there and you're just gambling on it, right? You're 25xing the whole Bitcoin, and you're, okay, this is my gambling account, and you're making some good gains. The first thing I would recommend is make sure that you take the profits out of there and put them in your real trading account, right? Let's say you 20x your whole entire gambling account and you win 20% or more. Let's say you get 40% in one trade of that whole Bitcoin, right? Let's say you have 1 Bitcoin in your account, 20x, and you make half a Bitcoin. Take that half a Bitcoin out, put it in your real trading account that you're going to be using good risk management with, and then just keep using that 1 Bitcoin for fun, right? That's something that I do. And if you're going to do that, that's the way I recommend you do it. Because, and if you're new and you don't have the play money to do that, don't do that, right? Wait until you generate some capital, then maybe you could have a gambling account. Because I'll tell you this, trading becomes a lot easier when you don't care if you lose the money, right? If you are obsessed with losing that money, again, you got to use the good risk management. But for me, I do have a gambling account. I'm sure a lot of people do. Make sure to take the profits out, put that into your real trading account, because the more you grow your real trading account, then you can actually start to make bigger, consistent gains with that real trading account. Okay, so I've gone over entries. I've gone over leverage. Let's talk about locking in profits. This is also an important part of risk management. Locking in profit is this. If I enter a short trade, okay, and I enter right here on the white line, and I have my stop loss up here, right, 0.25%, I will take anywhere from 30, well, I shouldn't say that. I will take anywhere from 20 to 50% of the trade out at my first take profit and then let the rest ride. A lot of times I'll take 25% out at the first take profit, then I'll take 25% out at the second take profit, and then I will move my stop loss to the first take profit. Okay, let me show you how that would work. So I enter my trade, I've got my stop loss, only risking 1%. Now we hit take profit 1. Okay, I'm going to take 25% out of the trade, which means I am automatically going to have more money in my account than when I started that trade. Great. Now what I do is I move the stop loss to break even. Okay, I'm going to move the stop loss to break even. So if I get stopped out now, my stop loss is going to hit at my entry, which means I'm guaranteed to get stopped out in profit. Now let's say we come down to the second take profit. I'll take another 25%. Remember, it's now 25% of 75% out of the trade. And then I might move my stop loss to maybe halfway in between the entry and the first take profit, which means worst case scenario, I get stopped out in profit. Or you could also move the stop loss to take profit 1, which means you're closing the majority of your trade at take profit 1 if price retraces back up, which in this case it did, right? But what this does, guys, is it's guaranteeing that you are locking in profit, which means you will not exit that trade in a loss. Let's say, for example, you have 2 take profits and you have your stop loss, okay, and you even move it to your entry. But we come down, we hit take profit 1, and you're like, let's go to take profit 2, but then we get the retracement and you get stopped out. Even though your stop loss is at your entry, the market fees and stuff, guys, you are going to, even though you're at break even, you're still going to take a small loss. It's better to lock in the profit because we're ensuring that the trades are a win, right? We're ensuring that those trades are a win. Locking in profit, something I've talked about in previous sessions, very, very important to do that, y'all. Very important to do that. And then another additional point here is do not fear losses. Again, if you're using good risk management, you should not fear the losses because you know they're not going to hurt you. We just saw how you could lose 7 trades in a row. And with 3 winning trades, you lost 7 out of 10 trades and you're in massive profit. Okay, you're in massive profit. A lot of times, guys, also just so that I make more money is, take profit 1, I'll take 25% out, move the stop loss to the entry. Take profit 2, depending on how far I think the trade is going to go, I might take 75% out here and just keep a small position open in case we go to the moon, or if I'm shorting, in case we go down to Hades. But or Sheol, depending if you're speaking Greek or Hebrew. But this is something that you need to decide on your own. A lot of times, if we hit take profit 1 and I take some profit out, then we hit take profit 2, it's a lot of money, and I'll be like, you know what, I'm taking out a big chunk of this, let the rest ride just in case. Move the stop loss to the first take profit, and it becomes a very profitable trade. All right, so what we need to do here is accept losses. These are risk management tips. Remember, risk is part and parcel of trading. We can't eliminate risk, but we can manage it. Therefore, accept your losses. Rely on plan-based decision making to realize profits in future trades. Take fees into account. This is important, guys. Always try to limit in and limit out as much as you possibly can. Obviously, shorting up here, well, actually, this trade I did limit in. I had a limit order set here because I trusted my TA as we were coming up there. I saw the divergence forming. I put a limit order right in there, and that's how I got such a good entry. But this wick, I had to mark it in because we came up past the 618. We came up to the 0.65. I guess, did I even talk about this trade here? That was a trade that I took. That wick right up here, as we're coming up into the golden pocket here, we started coming down from the 0.65, and I didn't get in until we were down out of the 618. It happened so fast. I had to mark it in there. But then I had my limit order set as we're coming down. It here. And, it was a pretty intense trade, guys. But it turned out pretty well. That was intense. It turned out well. I think I got out of there with some good amount of profit. But here's the thing. I had to mark it in here. You have to take that fee into account. Limit in as much as possible. Always limit out profit. And remember that if your stop loss gets hit, it is a market order. So a lot of times if I move my stop loss to the entry, you might want to move it a little bit below the entry, right? If your entry was the white line, maybe move your stop loss just to the orange line. just so that if you do get stopped out, you don't have to pay that market fee. That the small amount of profit you'd get being stopped out here as opposed to at this white line, the small amount of profit you'd get stopping out at the orange line as opposed to the white line will offset that market fee. And focus on the win rate. Risks will always be there to discourage you from trading, but if you have a strategy, if you've back tested it, if you know that it's going to do well, because you've seen it, you've back tested it, it has a 7 out of 10 win rate. And even if you lose 7 trades in a row, you're like, well, statistically this can't go on forever. And, just focus on that win rate, focus on only risking 1%, and understand that even if you're down for the day, right? Even if you have a day of all losses, don't get discouraged. Keep up the good risk management. Don't revenge trade. Don't kamikaze trade. Don't risk more than you should to try and earn back your losses for the day. In fact, one of the good tips I could give is if you have a day where you lose 3-4 trades in a row, stop trading. Just take some time off the charts. Go hang out with your wife, get a cup of coffee, have a beer, go for a walk, play with your kids, go to the gym, do some squats, do some deadlifts, go out to Longhorn Steakhouse and eat a porterhouse steak with a baked potato and steamed broccoli. Go do it. Go do something fun. Take your mind off the charts, because when you come back fresh with this all stuff in perspective of the fact that you have good risk management and you are going to be profitable over time, it will make your moods much better. Okay, guys? All right, that's it for the risk management, y'all. Very important stuff. Very important stuff. And I will see y'all in the next session.